All right. Hi, everyone, and welcome to our Solo 4K and Self-Directed IRA live Q&A, where we answer your questions that were pre-submitted. And of course, if you have questions right now, you can always send them in our live chat box. It will be on your right-hand side of your screen. So please feel free to submit your questions now. We do have a few questions today, but before we begin, my name is Leah with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. I briefly want to introduce our speaker for today. He is a sole apprentice and SDIRA consultant here at Sense Financial. He has a professional journey spanning over 18 years in real estate investing. Brad is also a licensed California real estate agent, and his passion lies in empowering people to attain financial independence, affording them the possibility of an early retirement. Thank you so much, Brad, for joining me today, and thank you in advance for answering our questions.
Yeah, absolutely. Thank you, Leah, for being here as well, and everybody who is joining us. We are going to get started here in a moment. Just a little bit of housekeeping as well. Please, we do have some pre-submitted questions, which we will go through, but I do want to encourage everybody on this call today to also submit questions while we're in the call, because I will answer those as well. And just bear in mind that there is no such thing as a wrong, bad, stupid question, none of the above. If you have the question, it's most likely that other people have the question as well. So encourage you to just type away and we'll get to them. Without further ado, let's begin.
All right. Our first question is from Bianca. Bianca's asking, how do you start investing in property using a self-directed IRA or SD?
Yeah, good question. And actually, this answer is going to apply for any type of retirement account that is investing in real estate, specifically solo 401k, self-directed IRA, which is the two products that we offer here at Sense Financial. So first off, the same way you would buy real estate personally is pretty much the way you'll buy real estate inside of your IRA or 401k. All right. First off, you got to find the property. Okay. So go search for it, talk to real estate agents, whatever. I'm going to answer this question assuming you've already identified the property. When you make the offer needs to be made in the name of the plan or the name of the LLC, IRA LLC or trust, or the solo 401k plan name. Okay. You are not your retirement account and your retirement account is not you. So everything needs to be conducted in the name of the plan. So write the offer accordingly. Now, with checkbook control as the plan owner, you have signing authority. So you sign on behalf of that plan. Of course, you can wire money on behalf of the plan, et cetera. So I'm not exactly sure, Bianca, where you're at in the process. I am going to assume that you're an existing client and that we've already set up your IRA for you. So you've got that out of the way. I am going to answer this question, though, because we have a little bit of time. I'm going to kind of expand a little bit and then circle back around to your specific question. But let's assume also for a moment that, Bianca, you don't have a self-directed plan set up yet. Oftentimes what happens is people come to us and they say, hey, I've identified a property and I want to buy it inside my IRA. Okay, well, my first question when I'm doing that consultation is, besides, what retirement accounts do you have? Let's assume for a second everything works. They qualify for it and it makes sense from a numbers perspective, but I do find that out as well. But let's assume all that's done. Is the property listed with an agent? Is it on the MLS? Is it on the open market? Or is it an off-market property? Because that makes a difference, right? Because setting up a self-directed plan and getting the money from the existing retirement account, possibly even making some contributions, set up and ready for self-directing is not the snap of a finger. It's not a few day process. It typically takes a few weeks minimum to get everything done. Minimum. I would plan on a couple weeks to get everything set up and then another 1 to 2 weeks approximately for the transfer. If it's coming from an IRA, it could be a little quicker because it's usually IRA to IRA transfer. It's a wire, but if it's a rollover, either moving from a 401k or into a solo 401k, that takes a little bit longer. So plan on 1 to 2 weeks, depending on the circumstance, for the rollover, and another 2 to 3 weeks for the actual setup of the plan. A solo 401k is a little quicker. It takes about a week to set up, but plan on 1 to 2 weeks on top of that for the rollover, the money to be, the plan to be funded. Once all that's done, you can pull the trigger on the property. Now, if you've identified a property or you know for sure, let me back up again. If you know for sure you're going to set up a self-directed retirement account that's going to invest in real estate, don't go look for the property first. Okay. set up the plan first. You don't have to roll everything in for the whole purchase. Let's say the property is going to cost $100,000 and the deposit and the home inspection and everything is going to maybe be $3,000 to $5,000 altogether. Set up the plan, get it funded with a few $1,000s, then go look for the property. Once you're under contract, once the 401k or the IRA is under contract, make the deposit, pay for the home inspection. During this time, you're going to have 21, 30 days, 3 weeks to 4 weeks of an escrow period, definitely 4 weeks if it's a non-recourse loan, to figure out getting the rest of the money rolled into the plan. Okay. So get it set up first and then go find the property. A lot of people, they do it opposite. They go find the property and then they come to us. Well, if it's on the market and there's other buyers are interested in that property, you're likely to miss out on it. I hate to say it. So talk to us first. Okay. Now, sorry that was long-winded. I wanted to address this for people that don't have the plan set up in case they are watching and listening. Bianca, let's say for a sec, you have your plan set up, it's funded, and maybe you even found the property. Well, make the offer in the name of the IRA, LLC, and then sign on behalf of that plan. Once you get under contract, all the money, all the fees associated, acquisition price, the down payment, the closing costs, earnest money deposit, home inspection, appraisal, everything must come from the IRA. Okay. In this case, from the LLC checking account. So you wire the money accordingly or make an online bill pay or write a check, however you want to do that. Okay. And then the plan owns the property once you close. The closing costs and everything is done also from the checking account for the LLC. And then once it owns it, get it rented. You can have a property management company. Ideally, that's the way you should go. Get it rented, and then the money for the rent checks can just go back into that same checking account. All right. And then you can pay bills out of that checking account as well. So let's not overthink the process of buying real estate inside of a retirement account versus doing it personally, because it's an identical process in the sense of the actual purchase. It's just where the money's coming from and who the owner is the primary difference. Again, you're the fiduciary of the plan, but you're not your plan. You're not your retirement account. So you're acting on behalf of it, but it's not your money. It's that plan's money. If you own the property personally, your plan has nothing to do with it. It's the same kind of concept. So Bianca, if you're here live, feel free to type into the chat some clarifying questions if needed. Otherwise, that's my answer, and we can move on to the next one.
The next question is from Rose. How do I dissolve an existing solo 401k?
So Rose, if you were on the phone with me, I would ask you what's going on. What are you trying to accomplish? In other words, what has you thinking about dissolving a solo 401k? We call it terminating, by the way. I guess you could call it dissolving as well. But ultimately, why are we terminating the plan? Okay, would be the first thing we need to find out. And secondly, are you still intending in investing in alternative non-Wall Street assets inside the plan? Okay. Now, this just happened the other day. A client said, hey, I'm no longer self-employed and I don't qualify for the solo 401k. I am legitimately retired. I have no intention of doing any sort of work whatsoever. So I can't have the solo 401k anymore. That's correct. But hers was easier because she actually had nothing in the plan. It was all liquidated already. She had distributed the money, and in fact, she had made one investment that went sideways. So unfortunately, she lost the money in the plan from that investment. So there was nothing in the plan at this point. So terminating was a pretty simple, straightforward process for her. Our client management team sends termination instructions, and I'll outline what that says in a moment. And then we send the termination letter to the IRS on behalf of the client, and the plan is essentially terminated. Okay, now let's for a moment say you want to still self-direct. This happened to another client. He had a solo 401k. He went to work a W-2 job, no longer self-employed. No interest in maintaining any sort of self-employment activity to keep the solo 401k. All right. But he has real estate. The 401k owned rental properties. All right. He didn't want to sell the rental properties. He didn't want the 401k to sell the rental properties. He wanted to keep them in the plan, in a retirement account. So for him, the only option is to go to a self-directed IRA. Okay, so let's simplify this. 1K or a solo 401k is a solo 401k, whether it's self-directed for alternative asset options or it's just in the stock market. An IRA is an IRA, whether it's invested in the stock market only or it has options for alternative assets. Now, for this gentleman, in his case, since he wanted to keep real estate inside of his retirement plan, inside of his K, which he didn't qualify for anymore, the only option for him was to basically transition over to a self-directed IRA. So we set up a checkbook IRA for him, and he's going through the process actually right now of transferring the assets, the cash and the real estate from the 401k, rolling it over into the IRA. This is not a taxable event, but this is the step that takes place. Once the solo 401k is liquidated, per the instructions he received, he'll reply to the email and say, hey, it's liquidated. Please terminate. And then we'll send the termination letter to the IRS on his behalf. And now, instead of a solo 401k, he has a checkbook IRA with the real estate inside of it. All right. I'm kind of simplifying it, but that's essentially the steps. Title would be changed from the 401k to the new IRA plan. And then now, and it's a rollover. So there's going to be a 1099 from the 401k indicating that it's a direct rollover. This is not a taxable event, again, like I mentioned. And now he's in the IRA instead. Okay, let's change the scenario. Let's say, and maybe this is you, Bianca, let's say you have no interest in alternative assets anymore, but you've got $100,000 in the solo 401k and you don't want to distribute it to yourself. Okay. So when we send out our solo 401k plan termination instructions, the first thing it's going to say is liquidate the account, liquidate the solo 401k. How do you do that? Well, you can distribute everything to yourself. You can distribute some of the assets to yourself if you're over 59 and a half without penalty, or I should say, or you can roll everything into an IRA that's going to just be in the stock market. So you have no desire to self-direct. So you don't need a self-directed IRA in this case. You just need an IRA at Vanguard, Fidelity, Schwab, T. Rowe Price, Edward Jones, wherever you want. And then you would transfer the money, direct rollover from the 401k in this case, to whoever that custodian is inside that new IRA. Okay, so those are basically your options. And then once that's all done, you reply to our email and you say, hey, the plan's been liquidated, and we send out termination instructions accordingly. That was a long one.
The next question is from Alex. How do you set up a brokerage account tied to a solo 401k?
Oh, great question, Alex, and a very common one. As you probably understand, the 401k plan, the checking account that it has that we help you set up, is not an interest-bearing checking account. So my guess is either while you're waiting or in between alternative asset investing, you want to have the money invested, right? Now, we don't recommend you bring the checking account down to a zero balance because eventually it's going to be closed, but there is no minimum if you have your account at Solera. So you can just keep a couple dollars in there and you'll be fine. So we have instructions in our client portal of how to do this. You don't necessarily need those instructions, but they're helpful. And we have 8 or so brokerages that we've all heard of listed there, the Vanguard, Fidelity, Schwab, et cetera. And you can click on whichever one you want to go with, and then there'll be instructions. Typically, if you have an account, not always, by the way, and I'll share this in a moment, but typically if you have an account at one of these brokerages already, like your own IRA or another 401k or a taxable brokerage account or whatever, they will allow you to do an online application for this. But if not, then you have to send in a paper application. They want like hard copy type application. Okay. So that's how you do it. Basically, you go to them and you say, hey, I want to open a non-custodial, non-prototype brokerage account, which essentially means that they're not providing the plan. You already have the plan from Sense Financial, the 401k. You just want to trade on their platform and use their platform to invest in public assets. And so this account has no tax reporting attached to it because they're not the custodian for the plan. They're literally just letting you use the brokerage platform to invest in the stock market. So it's a non-prototype, non-custodial account. Vanguard calls it I got to think of the name of it. They call it it'll come to me. It's a weird acronym that they use, but essentially at the end of the day, no matter where you go, it's going to be a non-custodial account. So just make sure it's in the name of the 401k plan and its tax ID number. And then you can link your Solera account to that brokerage and you can ACH money back and forth to get it in and out of the stock market. So that's how I do it actually with Vanguard and VRIP. They call it a VRIP account. So actually, if you get an associate on the phone at Vanguard, say that you want to open a VRIP account. I don't remember what it stands for exactly, but it's basically a trust account and it's non-custodial. And then if you say VRIP, those keywords, the Vanguard associate will know what you're talking about. But if you say like non-custodial, non-prototype, they'll figure it out, but it's not going to be as quick as just saying VRIP account and getting you to the right department because it's somewhat an uncommon type of account that they open. So, by the way, you can use an IRA and Alex, I see your question, so I'll move over to that here. But you can use an IRA to do the same thing. It's just the regular brokerages don't cooperate with this. Tasty Trade, which we have a link to on our website under the vendors page, resources, drop down menu, vendors, and then at the very bottom, you'll see Tasty Trade. You can open a non-custodial brokerage account for your IRA LLC as well there and do the same thing. But the other brokerages, they don't cooperate with that. If you want money at Schwab in an IRA, Schwab has to be the custodian. So in that case, if you want to take it from your checkbook IRA to Schwab, you have to do an IRA to IRA transfer, not an ACH, because it's a totally separate plan, separate retirement account. Yeah, no problem, Alex. My pleasure. And then Alex is asking, can you move existing IRA assets into a non-custodial account without tax implications? Yes. We were talking about okay, you're saying IRA here, but the answer either way is yes. Again, with the IRA, you're only doing that at Tasty Trade that we're aware of. None of the other brokerages cooperate with that, but it's literally just it. Think about the retirement plan. If it opens a non-custodial account at one of these brokerages, it's just an investment. Like it's like owning real estate in the plan. It's just a brokerage account. It's like doing a private loan in the name of the plan from the plan. It's a private loan. It's one of its investments. Okay. It's identical in this case. It's just a little more to it because you're opening with another financial institution. I have an IRA and want to move the cash in there, my self-directed 401k, then trade. Well, okay. Thank you. Alex said that. So yes, but in order to do that, you're doing a rollover from your IRA to your 401k. That's not an ACH transfer. That's two separate plans. Okay. Yeah. Cool. No problem. All right. What's next, Leah?
Next question is from Elizabeth. Elizabeth is asking, if I'm looking to close my S Corp that's currently sponsoring my solo 401k and I'm going to open an LLC that I wish to continue to sponsor the solo 401k, what steps do I need to take and in what order?
Well, Elizabeth, I would say the very first step is talk to your CPA. Okay. Make sure that all makes sense for your situation. You probably did already because most people don't just come up with closing their S Corp out of nowhere. Usually it means you just don't want to deal with payroll tax anymore. Maybe you're not making as much as you were, whatever the case may be. But changing the sponsoring business is not an issue. We do it all the time for our clients. So if you're one of our clients, Elizabeth, then you're more than welcome to contact our team and say, hey, I would like to change the adopting business of my 401k plan. We will then send you a form to fill out and you can do that. Now, if you have an LLC that's filing as S Corp, then the S Corp's not actually it's not actually the adopting business. The LLC is the adopting business. The S Corp is just a tax filing. So it dictates how the contributions are made, of course, based on running payroll and your W-2. But the S Corp is not part of the actual sponsorship. Now, if you just have an S Corp and there's no LLC and you're moving over and the question I originally answered, what I said is applicable. So hopefully that helps. Oh, I see Elizabeth added some.
Elizabeth commented, hello, Brett. I currently have a solo 401k with your organization, and I'd like to know if changing the sponsor of the plan is something you can help with. I currently have it sponsored through my S Corp, which I may have to close and plan on opening an LLC, and I would like for the LLC to be the new sponsor. The reason for the closure of the S Corp is that I've had losses for several years in a row, and I'm shifting gears into a new business, hence the LLC.
Got it. Thank you, Elizabeth, for the clarification. Not a problem at all. Yeah. The way that I answered the question initially is what happens. So just send a note to our team clients at SenseFinancial.com, or you can send it directly to me. That's fine. And then our account management team will reach out with that form that you can fill out, and then we'll amend the plan. This is not a taxable event. Now, just to clarify, Elizabeth, remember you must have self-employment activity. So this LLC must have, basically be providing services or selling something goods or services in order to qualify for solo 401k. So, all right, you're working on it. No worries. We're here to help. As a reminder to everybody, we offer unlimited client support. So you can reach out to us for any reason. We're not CPAs and we're not attorneys. and we don't provide legal or tax or financial guidance and advice. But when it comes to solo 401k, self-directed IRA, and the logistics around that, reach out to us. Absolutely. Good question.
Our next question and final question for today is from Annie. It is a RMD question. I own some K1s with the funds in my solo 401k plan. I did an asset evaluation of the K1s in November 2025. I'm turning 73 in 2026 and must take the RMD this year. Do I need to get another asset evaluation report as 12/31/2025 to calculate my RMD since those assets held in the K1s are commercial real estate? Can your team help calculate the RMD?
Good question. Well, I probably just answered that a second ago when I said we're not CPAs and we don't provide tax or financial guidance from that perspective. So I'll address the last question first because that's the easy one. No, sorry. Unfortunately, we cannot provide guidance on what your RMDs should be. That's a calculation that you can look up an RMD calculator. We might even have one in our client portal if you search in the knowledge base RMD. But verify that with your tax advisor. That's ultimately what you need to do. And if you're taking an RMD for 2025, it's as of 12/31/2025. It's not as of November of 2025. Okay. So the valuation should say on it as of 12/31/2025. I would reach out to the company that provided that valuation to you and see if they'll update the report to reflect the proper date, even if it doesn't really change the dollar amount, the value a whole lot or at all, just for your records and just to be clean with the IRS in case they start asking questions. You want to have the proper report to show them. I would definitely get an updated report. All right. So good question though. Appreciate that.
All right. That was all of the questions that we have for today. Brad, anything that you'd like to add before we conclude the live Q&A?
No, not that comes to mind. I think we should let's give it another maybe 30 seconds to a minute, see if somebody thinks of something before we jump off. No, I appreciate the time, and I will talk about the client portal a little bit. So, for those of you that don't know, if you're a solo 401k client, we don't have one for the IRA because there's a custodian in charge of that's there for most things that have to do with these types of questions. But for the solo 401k, we do have a client portal. If you're a solo 401k client of ours, you'll have access to it. And there is a knowledge base in there. You can type in keyword searches. Like if you type in Roth, you're going to get all the articles associated with Roth Ks or RMD. You can type in RMD and you can search for that and it'll give you everything that we have as far as RMDs. Ultimately, it's going to tell you to verify with your CPA, but that type of information is in there. So that can be helpful to people. But we're here to help. So you can reach out. All good. No, I think
Absolutely. Have a great day, everyone, and we'll see you in the next live Q&A.